Happy Wednesday, folks. Anthony Speciale here with Speciale Analysis, unedited and on the edge of the market. Hope you had a wonderful 4th of July weekend. Hope you recovered well yesterday. We are going to discuss today some of the positions we've been monitoring. So we've had quite a few work out well for us, some that are still in progress, a couple that got stopped out, and I want to talk about them as well, simply because, listen, trades don't always work, and we got to own them when they don't work. Maybe the instance could be different every single time, but typically, if we're shorting the market, relief rallies or short covering can, be hurtful. But the idea is to manage the risk, and you'll see as I show you a couple of these, we manage the risk really, really well, and I think that's the most important part, is to keep your winners as big as you can get them, and to keep your losers as small as possible, or at the very least, minimize whatever risk you possibly can. And that to me is the most important thing, because the losses are unavoidable. Listen, even the best analysts paid by the highest hedge funds and biggest banks in the world, they still endure losses. I mean, look at Kathy Woods. No offense to her, but she had an insane couple years with the COVID run, and then she's had her ass handed to her. I mean, it does happen. So for us, it's a matter of mitigating that risk, keeping it as little as possible, and then trying to seek those bigger profits. And that's exactly what our, attempt here is to do. So let me break these out. We're going to open this up and take a quick look at what we got here. So I'm going to start off with a couple that we've been watching that are in progress here. The first one we're taking a look at here is United Health Group. We had a good breakout here, good opportunity to buy. Price really accelerated towards our target, but this week thus far is not working out too good for us. So we're having a pretty decent sell-off here as we return from the 4th of July weekend. So the longs, the few that we do are looking at, are not as pretty as we'd like them to be. And ideally, you got to keep this in mind. Even though I shared this with you, you got to take perspective of there's much more risk here. So there's a risk of about 9.33% in attempts to make about 6.65%. So you have to decide for yourself, does that make sense for me? Does it make sense for me to risk more than I'm attempting to make? For me, it doesn't. So, but, listen, my job is to share with you the ideas. Ultimately, it's your decision to do what you wish with them. I'm not a financial advisor. I'm not a fiduciary. I'm not a broker or a dealer. I'm simply here to share ideas with you so that you can learn. That's the idea. The idea is for you to watch these videos, read my content, learn from it, so you can grow and develop as a trader yourself. A couple others we're watching is PayPal, PYPL. Had a short opportunity here, looking to buy back at about 57. Price is exhibiting some weakness. Today it's up, third of a point roughly. But we'll see what happens. If we can get this to press a little bit lower, perhaps we could then advance the stop to right above where this price action consolidated here. That would be ideal. This way we mitigate that risk. So that's the most important thing is to take that risk and get it as tight as possible. But then you still got to keep in mind, you got to give your trade some room to breathe in order for it to transpire. Next on the hit list we've been watching is Amazon. We had a breakdown here. Price retraced, came back. You could probably limit the risk pretty good on this. So from our entry point to where we're at now, you can only risk about 9.5%. That's a little better than our original risk, which was about 20%. So we've cut that risk in about half. If this doesn't work out, at least it's not as painful, but there is resistance, 3 channel structures of resistance here that should hold price action. If it does push lower, we're looking for a run down towards that 73 mark. We'll see what happens, give a little bit of time, and we'll see what transpires. We're watching Nike also. This performed nicely for us last week to the downside. I think we bought it right around this area here. So we're up about 7.25% as of today. Last week was a little bit better in the 8s. So, but it's working. There's probably some profit taking, some short covering happening here, and then we'll see it push a little lower. If we can get price action to come a bit closer, I would then consider mitigating my risk from where I have to stop there to probably right on top of this high here. So we would then be risking very, very, very little bit amount of money. Again, that's the name of the game. The name of the game is to live to trade another day, save your money, preserve your capital. That's the way it works. XLRE we've been watching as well. Here's the breakout. Price gapped, came back up, retested what was once support, is now confirmed resistance. Did not close above, and here you can see it's starting to sell off again. So could this take a little bit of time? It could, but this area here, this teal channel, which was once support, should here now be resistance. So that's what we're looking for on the XLRE. We're looking for that to push lower towards our next support structure where we have a target lined up. Now, to the trades that did not work out too good. Chevron took a 5% loss here. So, price broke out. This is where we bought it. This was our projected target. Energy sector rolled over. 200 days just about caught the price at this point in time, but we had a fairly wide stop. We gave it some room to breathe as the trade had a chance to move. So we were risking at the open about 18.25%. And then as we placed this low right here that confirmed that this channel was now good support, we were risking about 4.92%. So we had about a 5% loss. Listen, you're not putting all your capital into every trade. At least I hope you're not, because that's not too smart. You should be putting incremental amounts, same dollar amount into each trade, same percentage of your account. This way, when these losses do come along, we can easily offset them. That's the goal. But this did in fact happen here. It did roll over. We did get stopped out. It is what it is. There's not too much you can do about it. That's life. But I'll take a 5% loss any day if I have to lose. Next up, Boeing. Had our breakout, came within 1% of our target. We moved our stop to break even. We even came and advanced our stop to where this had retested. So Boeing we're out of, and we took a small gain of about just a hair, just right about 4%. So the 5% we lost on Chevron, we came back and basically got 4% back on our stop out here in Boeing. So again, if you are incrementally placing your trades, same dollar amount, same percentage of capital employed, you can see how even these little losers get offset by the little winners, so that the big winners have a chance to really, take your trading account in the direction that you want it to go. Last but not least, Citigroup. We had a stop out on a little bit of a relief rally here. Again, we advanced the stop. So we lost a whopping, 3.5%. So again, if you're going to take losses, and you're going to, the idea is to take them as little as possible. Now this has reset up again for another trade. This would have been a good sell signal. You could have then placed your stop, your entry here, your stop above here, and then your target down below. So this second run may in fact work out. We'll see what happens. But we were knocked out of this by just the wick of this candle. It's part of the game. But again, a 3.5% loss should not break the bank. Again, you should not be putting all your capital in every trade. You should be allocating the same amount of money towards each trade. You should be, based that on a percentage of how much, how much of your account you can apply to each trade without leveraging your entire account. Listen, if you're heavy short on a lot of stocks and the market gets a huge relief rally or short covering rally, you're going to get your ass handed to you. If you're long in an uptrend and the market takes a dip, you're going to get your ass handed to you. So you don't want to be too overexposed. You never want to have all your cash out at the same time, but you want to identify the best opportunities, and that's where you employ your money. So guys, if you have questions about that, if you're not confident in doing it yourself, I strongly advise that you seek a financial advisor, a fiduciary, a broker, a dealer, somebody who can manage your money, is licensed to do it for you, and they can help guide you through the steps of doing this if you're not prepared to do it on your own. But other than that, guys, that about covers what we've been watching for the past couple weeks. Some of the trades that are in progress, a couple that are in the profit, a couple that we got stopped out of, one with a little profit, two with little losses. But that's the name of the game. The name of the game is to preserve your capital, preserve your account, so that you can choose to, you have the ability to live to trade another day. The beauty of this industry is it's something you can do for the absolute rest of your life, something you can pass on to your children, grandchildren, great-grandchildren, whatever, and it allows them to have a life of financial freedom that most people will never understand or experience. That's why they call it the 1% club, because 99% of the people have no idea what it's like to live this life. But you can have that idea, and it is totally up to you to make those decisions to do that for yourself. So with that, I wish you a beautiful and blessed day. I hope you're having a great day. I hope you had a great 4th of July weekend. And I look forward to speaking with you tomorrow, where we'll cover a couple other ideas that we are watching. So I will see you then.